All right, back-to-back episodes of Real Estate Chat with myself and Robert Eid. Robert, yesterday we talked about the TREB release of the report, which is significant because they released it a bit earlier than usual. So breaking news, it was released as of 5 a.m. this morning. Robert, you messaged me a bit after that, and I read your message on the report around 6:30-ish before 7. And let's put the report on screen and
Sure.
let's start dissecting it, Robert. So you made your price prediction, you made your uh, unit sales prediction, and you were only off by a few numbers, actually. I got the email if anybody wants proof of that. So, Robert, let's talk first about units and price sold before we go into the more details of it and the charts that you provided to me.
Okay. Well, this is August. And so August, July is always sort of the bottom of the cycle until we get to January, December. And Treb very surprisingly gave an early warning yesterday saying that it was not going to be lower than a year ago, and it was not going to be lower than the month before. So sure as shooting by a matter of $8 or something or other, it was just about the same as last year ago, and just about the same as the month before. Now, the Trump price has been this price several times before, and maybe when we talk about what might happen in the future, we'll see how there's a series of levels around a million. Like we were at 1.2, we were at a million, then around 950, and then around 8.25, and then around 6, where if you look at the technical analysis of how charts behave, how people behave, there's levels of support that have happened and come and gone before. So this was a very good news story in that it did not go down. And it did not set any records as far as the number of units sold. We're still 25% off what normal if the 10-year average is normal. But that's much better than last month, which was 40% off. And for the price, when everybody's talking bad news and high interest rates and all this stuff, to stabilize, that's either a blip that we'll forget about in a few minutes, a few months, or it's an indication of all of us being wrong that it's going to go down 30%. So we're at 20%, which this guy Hogue from the Royal Bank, I had it also noticed that 20% is a pullback.
Mhm.
And that's enough so that, to me, people who are cash buyers but didn't want to pay the top prices that they were, instead of paying 2.5, they're paying 1.9. Like they're getting a bit of a deal. They're able to negotiate. It's a regular market of supply and demand in individual houses in individual neighborhoods. And that's the next story, that there was only 10,000 new listings, 10.5 of new listings last month, of which I estimate 2,900 were do-overs. Now, do-overs, they had it listed, they canceled it, they put it through again, it counted again twice. So that means like about 7,500, not 8,000, new listings came on the market when normally, using the old way of calculating before, it should be like 12 or 15,000. And so the buyer saw there was fewer houses, nothing any better than the ones that he's seeing now. He knows this person's been already for sale for 31 or 61 days. Let's put an offer in. The relator says to him, let's put an offer in, and they do, and they get a very cooperative listing salesperson, and they get a very cooperative seller, and they make a deal. So
Mhm.
maybe it's not so surprising.
Yeah, and so what about the active listings inventory level? You're looking at, we're hovering at 13,305, which is up from last year, August, but relatively speaking, are we at a good level? Are we decent? Are we below historical levels?
Oh no, we're below it. See, like it should be 15 or something or other, but again, we're so screwed up with the new listings that it's hard to really get a feeling of what's what. And also because we're at if you haven't sold in June, what do? You list it again. If you do, then you put it in July. If it doesn't sell in July and you want to go on holidays, what do? You take it off the market. You do it again while you're away? No, you wait and you put it on in September. So there's a certain number of listings that will appear in September that we've seen earlier in May, that we saw a year ago. They were rented, now they're going to come. I think the only person that can tell you if there's a lot of listings for sale or not is someone who's got a buyer that sold their place and wants to buy something and they can't find anything. And as
Mhm.
soon as something comes up, it's not bad. It's ready to go. The people give it a 2 month closing, but there's four other people that want it. So we're back in the same situation of the best properties attract the best customers.
And
And
that's what we're sort of hearing is that the inventory levels. I mean, of course, we're early on into quote unquote fall market. I mean, September is basically the time where we should see listings rise, and so these are obviously August numbers, and so it'll be interesting to see where September's figures fall. But
yeah,
basically, that's the story right now. Is that good properties don't last on the market for long. There's multiple offers. I'm getting phone calls from our realtors that things are selling and in multiple offers and their listings are selling. All of a sudden, inventory, even though it's not quite as picked up yet as where it can be, we are getting multiple offers on listings, and things are moving and showings are happening as well.
yeah.
So some of our listings, some of our agents are saying listings. There's listings all of a sudden went from like very minimal activity to all of a sudden a whole bunch of showings are booked for this week. So let's jump into your charts, Robert. I'm going to pull
Sure,
it up
okay.
here and we can comment on that. So here, let's start with this one.
Okay, well, this is sales only, and it just shows last year, this year, and the year before, the COVID year with the terrible down, the lowest time ever. And then it's got the 5 and 10 year average in color running through the middle. So we achieved an uptick. You can see it in the middle there of 5,627 sales, which was not a great month. It was the 21st best August there ever was, way below. You can see the numbers of about 30% below the 5 year and 10 year and half of the maximum and a third off last year and stuff like that. But way better than it was last month and way better than like if you look at COVID as the worst possible scenario, 2,000 sales, 4,000 sales, well, we're better than that. The only thing with that was May and this is August. So you see the dip always of August is a little bit lower. So it's following the trend of ticking up, and we will see. We will see before. Like people go on holidays, people went on vacation that they hadn't been for 3 years. People did all kinds of stuff with flying in airplanes and going to places and stuff like that that they didn't do for 2 years. They just did it to get it out of their system, or go finally see Aunt Lucy, whatever it is. So we'll see what happens when we go back to normal, back to school in September, and we watch it every day. The pace of sales average for the month, and then the pace of listings average for the month.
So isn't it interesting that the uptick happened in the August and quite a steeper slope than usual? Because usually we see August fall below July in terms of sales in the previous years, with the exception of that pandemic year, of course. I mean, even that year it dipped below July, but now it bumped up ahead of usual. So looking forward to September, do you see that sort of, I wouldn't say it's sharp, but it's a bit of an aggressive upward slope? Do you think that's going to carry on in September, or do you think a lot of this August pre-fall market buying will kind of, once next week's interest rate hike gets announced, unless there's surprises there, do you think that'll kind of, we'll see a leveling of sales, or do you think there'll still be a, like, I mean, of course, it's going to be more sales than August, but
I'm going to answer
how
that
aggressive?
compared to the 10 year. Okay. So right now we're the 21st best, which is lousy. And we're beating the 25th best July, which is the lousiest you ever want to imagine. So who cares about that being better or worse? If we can get up to being in the top 10, now we're humming. So I predict that we're going to go back to be the 15th best September, something like that, which is going to be way, 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 way better
Yeah.
than what we've ever, the worst case scenario, the medium case, and the best case. Um, we'll see. We'll see. We'll see how people react to that interest rate. You hit it there a minute ago.
That's right. And if that does happen, and if it does become anywhere near the 15th-ish best, that would be great news. And that would signify a big
That would mean that we're on the way up. Yeah.
the market. Exactly. So let's look at prices. So I know in our previous office meeting, I don't think we recorded it here on our YouTube chats, but we talked about, where price could possibly go. Could it dip below August? Could it just kind of skirt it a bit or skip over it a bit? Or could
Right.
it shoot up? And what we see is sort of a touch right? I mean, it's a good thing that it's a bit of a touch above. I was thinking, hey, like if July's trend persisted, it may have dipped below. But what's the significance here, Robert, and probably why the Toronto Regional Real Estate Board wanted to release these stats early because of this? So comment a bit about the price year over year.
Okay, 0.8 is definitely better than anything minus. And I had predicted in the middle of August that it was going to go down, but we did not have the last 2 weeks of August as a lull. We did not have the CME doldrums. People plowed right through. And if you look at it bit by bit, 416 sold for more, 905, pardon me, 905 sold for less than it did last month. So the more expensive houses sold, fewer, less expensive houses. I don't know what to say, but I think it's very good news that we don't have a minus, because every one of those, I'm looking for the market to go down because I want my buyer revenge to happen. Would just pounce on that saying, oh, I knew I was right. I'm gonna wait for it to go another 20% down.
The interesting thing to see is if we will see, I mean, when you look at the bump up in September last year, will we see that this year? Because the significance of that is if we get a bit of an upward movement in price, but it doesn't quite hit last year's September, then people might attribute it to, look, yeah, we told you that the interest rates would affect affordability. Now here it is. But we're looking at, I think, what, about a 10% increase that would have to happen between now, like a month over month increase, if I'm not mistaken with my math. We're at 1.1-ish. You'd need to be at 1.15-ish at about that to top September. What are your thoughts on that?
Well, there's two things: units traded and average prices. And there's a different mix every month of what sells and what doesn't, and we average it out. And we try and say that that makes sense. So in September, you've got people who want to move before the snow flies, and those are not typically $3 million buyers. They're typically 750, under $1 million buyers. So it may be that units will go up and sales will go flat. The famous bear said on TV, flat is the new up.
Mm-hmm.
And as far as prices, I think that's what what we'd like to see is stability with lots of sales.
Yeah. And it'll be interesting to see is as the rates go up, and if there are, I mean, there are subsequent rate announcements that are going to happen for the remainder of the year. And will it be a strong enough factor to kind of bring these prices down to, I don't know, whatever expectation people have, but it's that price trend that will we see continued year over year increases versus will we actually see at some point that the year over year prices start to decrease, right?
We've talked about that, and we've said it might not. Nobody is strong enough to say that for sure we're going to go down to 30% off, and anything else in the meantime is just a rally, a sucker's rally, whatever they call it. So we'll see.
Yeah,
But
we'll see.
there's nothing wrong with the real estate market. People are getting used to 5% mortgages, and they're also becoming used to incentives. Taking back a mortgage, prepaying interest, what we used to call creative financing, where the seller participates in making it easier for the buyer to buy his house, lower the buyer's payments, and by offering that special financing package, draw buyers to his place or negotiate a slightly higher selling price than if he was waiting for someone to come with hard, cold cash and want to bargain like a mad fiend.
And that's the most interesting thing about this market is if you think about it from a mathematical perspective, the rate of increases in interest rates is much higher than the change in price that's happening. Now there might be a lag, who knows, depending on where we end up in terms of prices next year. And yesterday's real estate chat, we recorded a video and we talked about how various economists saw the market and scenarios 1 all the way to scenarios 5 being the worst cases. It could be down 25, 30%, maybe even more, but time will tell. Let's move to your next chart here and let's look into this one. So this is sales and average price for August 22.
Okay, this is breaking apart 905 from 416. And the yellow flashes are supposed to bring your attention to something or other. So there in the top middle is year over year change in the average price was up 3.25%, not a lot in 416, but it was down, or was flat in a 905. Now, because there's 150% more sales in 905, it moderates the effect, and that's why we saw 0.8. as the year-over-year change. The number of new listings was more in 416 than 905. What does that mean? Maybe nothing, maybe something. There's nothing significant there. It's more of the same, but not as bad.
So it's interesting. I mean, in terms of comparing, as you said earlier, that perhaps a whole bunch of lower priced homes and the like brought that average price down a bit. Whereas in the 416, we know that basically there's solid demand across all property types. Condos downtown, there's high demand. Detached homes, you're seeing multiple offers still in the 416 areas. And let's bring it to
Well,
here.
let's go back to that one for just one
Yep.
second. Go back to
Sure.
that one, because all we're fighting over in all the 416 is 1,900 units.
Mhm.
That's all that's sold. And in all of the 905, everything surrounding, it's like less than 4,000. You got 62,000 members of the Toronto Real Estate Board divided by half. So not everybody made a deal last month, even to count two ends for each one. And the number of new listings, you look at it, it's a summer market, and we can't make a whole lot out of a summer market. Someone will sell for too much, someone will sell for too little for their own reasons.
That's right. And you're still seeing it when you look at the annual summary, you're still seeing a price growth of 15% plus in the 905 area versus 11% average price growth within the 416 area. So fair to say, Robert, that this is still attributed to that initial, when the pandemic happened, lockdowns, work from home became a thing, everybody started moving out and raised that 905 price. Now we're seeing price adjustments in the 905 areas, but perhaps it hasn't quite fallen down as much yet. I mean, on the annual summary, we're still up 15%.
Yeah, well, year to date, like you had a huge up. You were up 30% in that year for the first 2 months, and now you're down. So you're down to 15. So the year to date is still hasn't been long enough to be a year to date. It's only a spring and a summer.
That's right. Well, and we'll see. I mean, as the rest of the year.
That's right. Okay, now this you can't see unless you can somehow broaden it out. But this was trying to, my first initial look and saying, okay, if this is the peak, what's the range of things that might happen? And so without spending too much time on it, because it's too small to see, the price increased last month by 0.044, which is the first time since February to March that the price went up, and we're still averaging based on 6 months of about 3.1 or something or other percent lower each month on average. But that could change. That could change. I don't think it's going to change, but what that's all supposed to be is the first time you can say, okay, this is where the price is now. When's the last time we saw it? I've come up with a better chart that shows it in a little bit later on.
Which might be this one? No,
Which might be that one.
Okay,
so this is a guess into the future of, you can see that the peak of the mountain at 1,334,544, which is 100% the top price that we saw in February 22. So I said, okay, well, what if, because price has been dropping down. If they came down to where they are in August, what's that the same as? Well, we saw those prices in February, March of 21, and again in 21, and again last month. So that's not so bad, but it's still 20% off. Everybody's accepting 20% off is no big deal. The next place where we go down is to where we went to as a peak when the government intervened in March of 2017. We saw it on the way up before and after the lockdowns, and 30% off is not impossible, but that's allowing 1% a month's fade for another 15 months. So you can see how's this built the mountain. We went up, and then we went up for a jump, and then we settled down, and we went up, and then we went up, and then we went up, and then we just can't sustain it. So
what's interesting, Robert, is you brought up technical analysis earlier and their support and resistance levels, right? And they have something called a breakout, or like a breakout, right? Or a breakout. So when the line that you drew here for everybody seeing this for that March to April 2017, Feb 20, June 20, that was sort of like, if you're looking at pure charts and technical analysis, that's the resistance level. Like it didn't go above that certain price point. But interesting to note that it was during the pandemic that you saw a huge breakup, right? And that's that huge. I don't know if you guys will be able to see the mouse here when.
Oh, you see the red? You see the red first lockdown?
Yes, exactly.
There's a pandemic, but that was just an interruption in a whoosh.
That's right, and then it went back up. and then it broke through that resistance level, and then it shot way up. And so it's looking like when you draw these lines, Feb to March 2021, August 21, July 2022, that in a best case scenario, this may be the floor, right? The support level where prices are going
It
to
could
sort
be.
of hover it, right?
Yeah.
And I think the thing to watch out for those of you who are technically analyzing this, is if it breaks that floor for whatever reason, could be the effect of the interest rates. But then again, with so many interest rate hikes happening, everybody's adjusting to these levels. It's like it's almost as if they're brushing it off and say, yeah, you know what, that's fine. This is the new reality, and we're going to change the kind of home we're going to buy now. But yesterday you talked about the move up buyer, which the move up buyer, because they're selling something that has gone up in price, can afford that next thing.
And they have a bigger down payment. Yeah.
Exactly. And but even in spite of lowering prices, whatever that next best thing is that was up here in February is now slightly here, and their thing is here and then dropped. They can still move up. There's still that upward
Maybe less.
mobility
Yeah.
because they can afford it, right? So this is going to be interesting because I like this chart that Robert made because I looked at the economics report. I'm like, hey, wait a minute, this looks familiar. I've seen this before. Robert put this together months before any of those reports came out. So interesting to sort of see that. Did we miss one? Yeah, we missed one. This one, active inventory.
So there's two lines in the middle going straight, which are the 10-year and the 5-year average, which is 15,000 and a little bit more than that. And we're at 13.3. So there's active inventory snapshot at the end of the month. So this is a good reading of what really is true. And of those 13,000, less than 6 sold. So it should be a seller's market with those number of sales and those number of inventory, except there's lacking consumer confidence.
Right. I mean, that's definitely one way to put it. And if you look at it strictly from the data that's here, yes, there is seasonality. So for those of you who are not used to seeing inventory like this, there's seasonality. That's why there's ups and downs. That's normal. When you're looking at the previous peaks of inventory, you're seeing that at 13,000, you might think, hey, all of a sudden the market went, a lot of inventories on the market. But relatively speaking to previous years, when you see peaks of 2008 nearing 28,000ish, let's say, not quite at 30,000, but you're comparing that to levels right now that are even less than half of that. That's sort of the one thing we talked about supply and demand that's holding up these current level of prices, right? Is the fact that there really isn't. I mean, yes, there is a lot of inventory, but there really isn't a lot.
There's not a glut. There's not a glut, and you need a glut for prices to fall.
Exactly. And everybody who needs to sell and is motivated to sell and needs to make that move is on the market. Anybody who isn't, I mean, you would have thought that once interest rates started to increase, everybody would have been scared and said, you know what, let's sell off our investment properties or let's sell off our principal residence and go back to renting. That didn't happen either. I mean, the natural increase up there and what the media probably made a frenzy about was all of a sudden there's a lot of inventory. That's normal in the cycle anyway. Like there's a normal increase in the inventory levels, but we're still seeing low inventories, relatively speaking. And Robert, project this 5, 10, 20 years from now, I don't think we're going to get to the point where we're going to see a lot of inventory on the market. And this is where politics come into play and all that when they address the supply side of it. I don't think that's ever going to be solved. What do you think?
Well, we're never going to supply all the demand, no. And they're figuring out what they're going to do. What we need to do is build satellite cities, start fresh. Like not everyone needs to live next door to the O'Keefe Center. They just don't. So the transit and nodes on the train, no, that's not going to work. Yonge Street and the Oak Ridges Moraine, they're going to have to really figure out about water recharge and what do they want to do. And there's so many limits to growth on Toronto the way it is now. They've got to jump. It's like Vancouver, except they have mountains. They got to jump over that barrier of the Oak Ridges and Moraine and build new houses, build new cities out past the airport, out where the air is free. Used to be cottage country. Just, that's how you're going to do it.
And that's where
same thing to the west.
And that's where the growth is happening right now. And you're also hearing, I mean, mind you, BC is a different story, but you're hearing why places such as the East Coast or places such as Calgary or any big cities in Alberta are seeing that growth. And You're seeing a lot of investment activities, pre-construction condo sales happening in Calgary, and they're advertising, cash flow positive properties, and it's
That's where the
attracting
specs
people.
went. That's where the specs went, and also their oil prices up. That's like
That's right.
Alberta is a one industry center. They're not the same as Vancouver and Toronto,
Yeah.
and also Ottawa is different entirely again.
No, I mean, they're trying tech. So Calgary is trying to become a tech hub, and it'll be interesting to see where that happens because unlike oil or any, natural resource which depletes, tech is, you would assume that it continues to grow. So I mean, similar to in the US where you're seeing a lot of people from California moving to Texas because a lot of the major companies are now opening offices up in Texas, right? And so Texas real estate prices are going up. California remains to be unaffordable for many people. So it's not the same thing, but Toronto is for the people trying to live there. For some it's out of reach. For some they can only rent. And so what's the next alternative? If tech does become a boom in Calgary or any place where they decide to make that the
Sure.
hub or the
Yep.
satellite,
Yep.
that's where people end up going. Except I hear that it's very cold in the winter. So
Well, it's cold in the winter everywhere, but if you're making enough money, like you can go on 3 vacations in the winter.
that's true. Okay, let's go to this one.
Okay, well, this is new listings, and then because they didn't announce it yet, I only have an estimation of where we really are on new listings. So if we use the traditional way of calculating new listings, that's every new thing that comes through, whether it's a do-over or whatever, we're below. We got 10.5, where normally you have 10.5 or 12.5 or 13,000, but this we just came off of a boom, so we're adjusting. We don't know. So just like inventory, it's less than what it was, and it's not a big listing month. August is not a big listing month. Never mind the nonsense with the relist. Trev will finally get around to dealing with it, or people will stop using that strategy. We can't do anything about it. Can't cry about it, except know that it's there, and the number is a little bit inflated. It's just like inventory, that there's fewer than you think, and that's why buyers are all of a sudden feeling a little bit of pressure to buy, where they thought they had the cat by the tail.
So what's our outlook for September? I mean, we're looking now at sales to new listings ratio at about what, 56%, and what was on the report, months of inventory setting at what, 1.2, 1.3, 1.4, or something like that. And
Oh no, we're up to nearly 3. We're nearly 3.
good point. You know what? I quote the 12-month moving average thing that they do, but in reality, yes, for the month, we're at about 3. So I mean, that'll be a topic for a different video. Why we do moving, why they report, they being Treb, report moving averages. And yeah, sales to new
They're in the
listings
good
ratio.
news business. They're in the good news business, which I guess we're in the good
Like
news
it's
business.
smoothing out the impact, right? So yes, Robert correctly pointed that out, that if you look at just the month, yes, you're looking at 3 months of inventory.
Yeah, depending on how you count.
Depending on how you count, and depending on how you. So let's talk about the implications of this, right? This is the show and tell part of looking at these charts, what they indicate. What does that mean for September? Somebody buying, selling, looking to invest now. What are we going to see in terms of listings? And the absorption rate is the most important thing, I think, Robert, right? If there's more listings that come up and sales pick up along with it, then we're in a pretty healthy market. Prices will sustain, if not grow, and things should carry on normally. The danger is if listings come on the market and sales don't quite pick up. But based on what's happening in the last 2 weeks of August and the current sentiment in the market, it doesn't look like sales will not happen, coinciding with the listings. What are your thoughts?
I agree. It's not that sales will not happen, but only the best stuff will sell. If you can't show it because the tenant won't let you, it shows lousy because it's, for whatever reason, had a hoarder living there for 15 years. If it's on a busy street with the train in the backyard, only the best stuff is getting the attention. So that's always the way. It's just we've had 10 years of everything selling because you could get it for a little bit less. And the days on the market is not unreasonable. I didn't do the workup on that yet, but
You're looking at about 22-ish, right? I'm going off of memory, but it's about
yeah.
22.
So it's not 10, it's not 5, it's not 50.
And well, mind you, property days on market is 34. So there's a distinction there between listing to listing versus the property's overall listing. So again, it's a month.
That's right.
It's not,
Which
it's
is
not 15,
perfectly
not
good.
15 days. It's not,
Perfectly good, except not in February of this year.
exactly.
If it was took more than 7 days or something wrong with the place. So,
Yeah.
or you're doing it wrong. So it's either a blip that we'll forget, or it's the sign of something good. And if people are already used to 5% interest, then we got nothing to stop us from going up, at least staying flat, not going any lower.
And it'll be waves anyway, right? So the next set of buyers are the ones that are going to be faced with the
Correct.
higher interest, and they're going to be adjusting their expectations. And you know what? Whoever is capable to buy and it fits their budget and buying needs, ultimately that's what it's all about, right? So, yeah.
Yeah, I don't know. Okay, we the pre-cons are where the investors are. They're not buying the resales. So that's why it's easier breathing on everything, except for something that's got 2 illegal basement apartments and a second story that you can change into a unit and the main floor in the neighborhood that nobody's paying attention to. That's always going to sell well.
Awesome. So for those of you watching, if you have any questions, feel free to reach out to Robert or myself. We have our contacts and our websites in the description here. And we're going to be doing more of these episodes regularly, and we're going to be analyzing, dissecting the market, giving you some strategies, advice, ideas on how to make your move an effective one, and the one that makes sense for your budget and for your lifestyle. And you know, we'll have to see what September's results hold, but the most important thing is, you know, you make a move that makes sense for you, right? You look at your budget, you look at your pre-approval, work within that, have a realistic expectation about the market. And you're going to hear all sorts of different things being said on two extremes on both sides of the spectrum. The numbers don't lie. I mean, I guess you can make numbers, say whatever
It'd
you
be
want.
interesting to
But
see what the Toronto Star says. I don't know whether they
yeah,
do it tomorrow or today.
exactly. I mean, they'll make a, either they're going to say it's flat, even though it's a bit of a edging up, or I mean, the only thing is you won't hear anybody saying prices are down, because they're not, right? So, but we'll see. All right. Thanks for joining us on this episode of Real Estate Chat. And Robert and I will be back on the next episode. Stay tuned. Bye for now.